Hey everyone, I'm Tony with Clarkson Santoro, and this is our weekly real estate update for May 20th. In this weekly series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those numbers mean for you as a homeowner or as someone who is looking for a house you will love to call home. The current inventory is 44 homes, up from 37 last week. The average asking price of those homes was $1,992,000, which is down from last week's average of $2,010,000. 8 homes asking an average of $1,831,000 went pending this week. That is the same number as the number of pending homes last week, with a higher average asking price from last week's $1,892,000. A total of 11 homes sold this week with an average sales price of $1,982,000. That average price was down from last week's average price of $2,124,000. And the total number of homes was lower than last week's 13. Now that we've seen what the market did this week, we also like to look at 6 broader trends that help us understand the strength of the San Ramon market and, more importantly, give us a clue about where the market is headed. The first 4 indicators give us a look at the quantitative numbers, which tell us what the market has been doing, and the final 2 indicators are more predictive of where the market might be headed. The first indicator is the inventory levels of homes that are actively for sale last week. We gave this indicator a B+. This week, the inventory of homes for sale has climbed to the highest it has been in over a year. At 44 homes, we are now seeing inventory levels reaching close to what they are in a normal market. This week, we are giving it a grade of C+. Our second indicator is how often the market inventory of homes turns over. Last week, we gave this indicator a B+. The turnover rate this week remained at 1.5 times a month, which is the same as last week. While the inventory has increased over the past 2 weeks, the number of pending sales remains consistent, meaning that even though there is more selection on the market, the amount of serious active buyers is staying consistent week to week. We will keep this indicator at a B+ this week. The third indicator is the amount of money buyers are paying over the list price. Last week, we had this indicator as an A+. The 30-day rolling average of how much buyers are paying over the list price remains around $290,000 or 14% over the asking price. We still continue to give this indicator an A+. The fourth and final quantitative number is the average closing sales price. Last week, we gave the sales price indicator an A. This week, our 30-day rolling average sales price remained well above 2.2, despite dropping by $50,000. At $2,279,000, the average sales price continues to stay on pace to have another 20% increase more than last year's prices. This week, we are giving the indicator a grade of A. With the inventory finally reaching normal market levels, the other quantitative indicators continue to point to a very strong market, even if it is beginning to regress towards the mean. The 2 predictive indicators that we follow continue to point to a temperature change in our market very soon. If we have been living in Death Valley as far as market temperature is concerned over the past few years, imagine we are moving towards San Diego. Still very warm, just not blistering hot. The first of the predictive indicators is the economic health and the financial value of the high-tech firms located in Silicon Valley. Remember, about 80% of the buyers in San Ramon come from Silicon Valley, and their buying power is based on the wealth of the high-tech sector. Last week, we gave this indicator a grade of C-. This week, the high-tech fund we track closely, Invesco QQQ, remained at 290 over the last week. On January 1st this year, the fund stood 38% higher at 401. Over the last 30 days, it has declined about 18%. But the curve looks like it is starting to level off, so buyer portfolios could stabilize soon. This week, we are keeping the indicator at a grade of C-. The second predictive indicator we use is the mortgage interest rate. Last week, we gave this indicator a lower grade of C- as rates moved up. This week, the rates dropped by 0.5%, down to 5.25 from the previous week's 5.3. This is the first time the national average rates have dropped by more than 0.01% since the first week of March this year, but rates remain higher than they have been since late 2009. We'll keep this week's grade for this indicator at C-. This indicator remains one we will watch closely for its effect on the market. Taken together, we give the overall market a grade of B-. The positives continue to outweigh the negatives in today's market. So even though it feels like it is cooling off drastically, it bears repeating that the cooler temperature of an 80-degree room compared to a bright, sunny 100-degree day is still an uncomfortably hot room. Our market today is still well above an average hot market. I hope this weekly summary and commentary was helpful. Let me know in the comments down below, or contact us directly if you have specific questions about what the numbers mean for you. And if you find this information helpful, hit the like button and subscribe so you can always be up to date on the latest real estate trends here in San Ramon. Thanks again for joining me. Have a safe weekend, and we'll see you next week with a new update.